Guys, welcome to BearBull. Guys, in this video we'll be talking about vouchers, okay? And we will be talking about four types of vouchers: primary vouchers, collateral vouchers, internal vouchers, and external vouchers. Remember, vouchers are all about expenses. Vouchers are all about evidence, okay? Like when you're doing some accounting work, uh, based upon based upon what evidence will you record the transactions in the books of accounts and in the financial statements? Well, based upon vouchers, okay. Vouchers are documentations of all the business activity that was carried out. For example, if you sold goods, okay, then you will having invoices. Those are the vouchers. Those are the supporting documents based upon which you will record the transaction. Similarly, bank statements, they are also a sort of voucher. Based on that, you will be enter the transactions in the in your cash book. So these are all the vouchers, and vouchers are all about evidence, and they are very important when auditors come and audit your financials, okay. They vouch each and everything. They vouch for the evidence, okay. So let's move on. So first, talking about primary vouchers. So primary vouchers is when written evidence is available in original, okay. It is known as primary vouchers. For example, when you purchase something and you go to a shopkeeper and he gives you an invoice, so he gives you the original invoice, okay. He will give you an original invoice. Of course, he will keep a duplicate copy with himself. So for you, that original invoice is called primary voucher because you are having the original one, okay. So when written evidence in the form of invoice is in original. The opposite of primary voucher is of course collateral voucher. It's when evidence in original is not available, okay. Copies of such evidence are made available for the purpose of audit. These documents are known as collateral vouchers. Sales invoice. So when you go to the shop, okay, and you purchase something, the shopkeeper will give you an invoice. So what the invoice he will give you is the primary voucher because he will give you the original copy and he will keep the duplicate copy. So for him, it's a sale, and the sales invoice for him is a collateral voucher, okay, because it's a duplicate evidence, okay. It's a copy of such evidence because he has given the original invoice to you, and he will keep the copy of sales invoice with him. So for him, the sales invoice is a collateral voucher because he is not having the original one. He is having a copy. So he is having the copy of the evidence of sale, not the original evidence of sale, okay. Moving on, internal vouchers. So internal vouchers are those vouchers originating within the organization are known as internal vouchers. For example, sales invoice, we just talked about it. Sales invoice is being generated within the organization. The seller, the business is generating that invoice, okay. So that is internal to the organization. Similarly, material requisition slips. So for example, you are running a business and you need raw materials, so you will write to your raw material store that in order to produce the goods you need certain amount of raw materials. So that material requisition slip is for the internal purposes of the business. So that is called an internal voucher. Moving on, the opposite of internal voucher is external voucher. External vouchers are vouchers originating from outside the sources are known as external vouchers. So those vouchers which the business is not preparing, rather they are receiving from somebody else, okay. They are external to the organization, so those are called external vouchers. For example, purchase voucher. You are purchasing something, so you get an invoice for that. So that invoice was not generated by you, it was rather generated by the person who basically supplied you the goods. Similarly, mortgage deed, okay. When you take a loan for a house, the mortgage deed is being prepared by the bank or a mortgager. So you are not preparing it, rather someone external to the business is preparing. So that is also an example of external voucher. And bank statement, once again, even though it contains the banking transactions which you generated throughout the period, but you have not prepared it, rather your bank has prepared, and bank is external to your organization. So once again, bank statement is also a piece of evidence and or an external voucher, an external piece of evidence. So I hope this video clarified your concept about vouchers. If you like the video, then do subscribe. Thanks for watching.